to repeat all this stuff about you identifying as a data center, Voodoo.
No, we'll get to that. No, there's enough.
There you go. I see it says live on the top left. I think we're live now.
Thank you for that.
Hi, everyone.
Sometimes you can have the best preparation. You can do all the work before. You can get everything land up in your head. You have the perfect guest in the perfect market. You just got to click the button to make it legit. So, Aram, how are you? Welcome. Thank you for the little.
Pretty good.
Thank you for the little tip over there.
Yeah. But I think I'm trying to check on LinkedIn again. Can we just verify that we're live before we continue? Because I'm trying to.
I just shared a link with all my subscribers, so or all my followers. So I hope it works. Otherwise, it's going to go to a dead link.
And I
let me
can't see
try
this
it.
live yet.
Click to join.
Okay, I think.
Yeah, we're live.
I think we're live.
We're live.
Yeah, we're live. We're live. We're live. I can see.
There you go.
Yeah, there you go.
All right, good. All right, cool. Let's
now
start
you can
then.
say GM.
Pretty good. GM, yeah, it's the
GM.
It's the right time to say GM, and I have a very interesting thing that I wanted to share. It's one thing and that we both have in common. Anyways, let's start with the GM. GM, everybody. I'm joining from Vietnam here. I'm here in Asia, and yeah, super excited to be here. How are you, Didum?
I'm pretty good. I'm kind of, I'm kind of like diving deeper into the world of stocks now. Just trying to keep up because, obviously everyone's watching Anthropic and SpaceX IPOs coming this month. Like no one really cares. And I claimed an $80 airdrop yesterday, so that kind of tells you the state of the trenches. My airdrop is in the 2 figures, and the IPOs that are hitting us soon. What's that? 12 figures IPO coming up. So that's the discrepancy that we want to talk about today. And I'm glad that we have Ananai on. But you said that you guys have something in common. What do you guys both? Do you also run shirtless, Ananai? Is that a thing?
No. We have the same university in common. I mean, ages ago, I also went to Cambridge, did my MPhil in management there, and I did something very spectacular, which I think only Cambridge grads will understand. It has to do with the Mabels. I actually crashed St. John's 500th anniversary Mabel in 2011. That was ages ago, but I crashed it. And I remember it was super hard to get in, man. But I crashed it, and we basically I made until the morning, and it's called Survivors, and it was one of the most epic experiences. So
that's great. That's actually how me and my co-founder met. We basically met trying to break into a Mabel's. It's not like a common activity for all the listeners out there. It's like me and Aaron have done it. It's very, very rare. And these guys have industrial standard security. They have bouncers everywhere. I actually helped my co-founder crash St. John's Mabel. It was
crazy.
Basically, I mean that was pretty easy. I think basically I was on a subcommittee that year, so they just let me walk in from my room, which was in the middle of the ball, and he just showed up to my room 16 hours before, played online poker for 15 hours straight, and then I went into the ball, and they have these wristbands to make sure that even if you did crash, you can't move around very easily. And he bought a bunch of cloth and colored pencils, and he was just like, "What color is a wristband?" I was like, "It's purple." And it was purple that year. And he just colored in a piece of cloth purple and tied it around his wrist, and then went.
Yeah, wow, crazy. I remember there were 2 layers of security, and one of my friends, they were I want to say uniformed officers, and then they were students who were working as officers. Yeah. And then I told a few of my friends that I'm going to crash. And then there was a point in time, when I'm already inside, and I had a friend who was like, "Hey, I'm going to get into the event, and I'm going to sneak out after an hour or 2. And I'm like, "Fine, just give me your wristband." But then it shouldn't be broken. And then I managed to squeeze my hand and put a lot of soap, and then just put it on.
Yeah, they don't look too carefully. It gets dark. So the security guys can't see very, very easily if you have the official one, or it's just the same color.
Yeah, that was
I know.
A crazy experience. So yeah, I mean, it's.
I know Cambridge mostly through the movies. I'm a bit of a maths geek myself, and I kind of the Alan Turing movies. Everything that we're talking about now has its birth in Cambridge. It's quite a place to come from, especially if you're a mathematician. What kind of what was your favorite, niche within the mathematics department over there?
Yeah, I mostly did. I did like a lot of high energy physics. That's basically quantum physics, and we were really lucky in the final year. We have Professor Richard Josha there, who made basically the first algorithm that everyone learns about when they were in quantum computing, Deutsch-Josha algorithm, and he's like one of the founding fathers of the field. So he taught us quantum computing, and then I actually did some summer projects in it. So I worked on IBM's Qiskit computer, which is open source. I still have some. There's some papers out there which like if they have to reference Qiskit because I was one of the early contributors, my name's on it. And then I was going to do a PhD, but I decided not to because I was getting paid 4 times more to go work in finance. So I was like, okay, I'll just do that instead. And I don't know, maybe I should have stayed in quantum computing. It seems to be taking off now. But yeah, it was basically quantum physics, quantum computing in my final year. And then all the like pure maths that goes into that, so algebra, representation theory, and so on. But yeah, I mean, Cambridge is a great place to learn theoretical physics because like basically every famous theoretical physicist in the last 400 years has kind of gone through there at some point, right? Like if you remember Oppenheimer, like basically everyone in Oppenheimer spent a stint at Cambridge or studied at Cambridge,
Newton,
right from Newton, right? I think since Newton, it's been known as a center for excellence there. Stephen Hawking obviously was professor there until recently.
Oh yeah,
and they continue to do great research in that area.
Yeah,
I mean,
I even met him briefly.
Stephen Hawking.
Yep.
Yeah, I met him as well. Yeah, he actually he passed away while I was there in my second year, so I remember that as well. It was like a big deal.
Yeah.
It was,
Yeah.
But like what you're describing is like a typical tension between the academic and the doer. Like whether you want to go deeper into the theory or stop. They're like, I stop there. I have enough theory now. Let me go apply it and make some money. And it's like I don't think even Heisenberg or Niels Bohr, any of these guys, I don't think they could have dreamt of what their spooky action at a distance and all their quantum theories would have yielded. And now everyone's using it to FUD my coins and dump my bags, and everyone, it's like, oh, it's gonna crack all encryption in 4 years. So it's quite a crazy time. I think if it's for what it's worth, I think you chose right. Like applying these tools in the real world, helping people get prosperity through them, making the world a better place through these technologies that are really cutting edge. I think that beats another peer-reviewed paper like reviewed by Tweed Jackets.
Yeah, I think it's even harder, right? And I think there's 2 points I'd add to that. Like one is actually something I read by Stephen Hawking when I was like considering what to do at university, what to apply to, and he said it was very interesting. He basically said back in the early days, right, like 2,000 years ago, 3,000 years ago, if you wanted to do anything interesting, you had to be a philosopher, right? So philosophers thought about space, stars, astronomy, math, like all these interesting problems. And then that kind of shifted more towards like the hard sciences, but you still had to be in academia. And now there's no real reason to stay in academia, right? Because like the actual cool, most interesting frontier, most difficult research is actually being done at AI labs now. And it's being done in the startup community where people are applying AI. We're applying AI in our own way to the world of business and finance, right? Our entire company basically runs on AI. And it was really interesting from him because he basically said you basically had to be in academia until recently to do the cool, interesting frontier stuff. And now, I mean, just last week, Timothy Gowers, who lectured us in first year on analysis, a Fields medalist, right? It's like the Nobel Prize of Math. He was like, I was mind blown that this like 80-year-old math problem had been solved by OpenAI when mathematicians hadn't been able to solve it for so long. So I think that's pretty interesting. And then, the other thing is, I think the genuinely hard problems are actually applying them to real life. They're kind of messy, more difficult. Academia, you always end up with this very nice, neat problem, or even if it's not nice and neat, you can kind of make enough assumptions to make it nice and neat, and it will only get published if it's kind of a complete solution. But a lot of these real world problems don't have complete easy solutions, right? Machine learning famously is not on modern machine learning, right? Using LLMs and stuff is not on like very rigorous, solid academic mathematical foundations. And it's no wonder that it's been industry that's kind of pushing the boundaries there in the frontiers, because academia, you can't publish like an academic paper in a math journal without it being 100% rigorous. And that's just not the way progress is made nowadays. So I think that's really interesting. And but part of the reason I decided to leave academia and go into the not the real world. It's a bit.
This is as real as it gets. The trenches. That's
sure.
Where the rubber hit the road. GM to Arya and Arjun and Josh and Chris and Merrick and the QFEC guys, everyone's in the house. But
Yeah.
you know, that's a very interesting thing you say. Like the pivot to the real world. Obviously, you know, you mentioned it's much more lucrative than academia, and your first stop was actually in a quant trading fund in the crypto space. Obviously, now crypto is starting to behave a little more like a traditional market. We have options, we have futures, we have ETF. But you know, when you were getting in, it was a lot more of a Wild West, and a Wild West means information asymmetries and lots of arbitrage opportunities. So, what was that like for you coming from the hallowed halls of Cambridge University to the trenches whenever you made that move?
Yeah, it was pretty crazy. I think, you know, I started my career at Flow Traders and then I moved to Tower Research Capital, and I was in crypto from like the beginning. And like how inefficient the markets were in 2020, 2021 when I joined was just like ridiculous. Like we would see 40-50% arbitrage opportunities by eye that our algorithms wouldn't even take because they failed risk checks because they were tuned to equities markets where opportunities were just never that big. So they just assumed something was wrong in the pricing and they just like turned off, and we would have to trade them by hand. So it was really interesting for me, and I think the cool thing about crypto is there's so many different types of market structure, different types of exchange, different types of coins, different market regimes, and things can shift regimes so quickly that you really have to kind of think on your feet, and speed is like way more important than, you know, sitting down for like years and producing like the perfect model for some market that's existed basically since forever. So that was super interesting. You know, we had our one foot in the trenches and one foot in the ivory tower. I think that's like a good way to say it, right? Like, on one sense, we were trying to be really systematic and produce these like very scalable, advanced algorithmic strategies. On the other side, you know, like we would see on Twitter and Reddit that, you know, like I remember there was this day game coins started like pumping. There was this game called Mines of Delaria. It was like a DApp, Ethereum DApp, and that coin just started pumping like crazy. And then we had to incorporate that into the trading strategies, right? Because we were like, okay, you know, like we need to be careful how we hedge this. We might not be able to find borrowers on this. Like the funding rate's going to spike. The model is going to be able to realize this. And yeah, it was just a crazy time, basically, and kind of an induction by fire, I think, into the trading world. Some of the other guys who left the same training program I did, they got put maybe on like US government bonds, right? And they really didn't get that full exposure to how crazy the market can be and, you know, how quickly it can change. So that was interesting. I did that at Flow for a year and a bit, and then I moved to Tower Research, where they were kind of doing it in a much more scaled and systematic way. I think the year Tower hired me, they made over $1 billion just in crypto in net trading profits. So yeah, absolutely crazy time, doing super well. And yeah, it was a real... I think it was like really energizing. I really felt like I wanted to learn how everything worked, and I think I ended up being one of the few people when I shifted eventually to trading traditional assets that understood both how the crypto exchanges and market structure and use cases and UX work, and how the traditional ones work, right? Like IBKR, like how bad they are, and, you know, why haven't they changed? And that was really the foundation for QFEX. Was like, you know, we've seen a lot of these market structure changes work really well in crypto. Why don't we bring them to a traditional assets world? Back then, we didn't even know that, you know, it wasn't really a bull market back then. We just thought that it was a cool idea and someone should try it. And now, you know, we're offering ability for people to trade very fast, very light KYC, actually, well, no document KYC and some light compliance to trade high leverages on a bunch of stocks very safely using innovations from the crypto world. And yeah, I think people are really realizing the advantages that that can bring to trading experience.
You had me at high leverage. You know what I'm saying? That's an incredible journey. But
yeah, you're gonna find high leverage on interactive brokers. Let me tell you, like you have to come to QFEX.
No, I think it's the whole package. You know, it's like once you tokenize, you can offer.
Aram, can you hear Dudu?
No, Dudu,
No.
I think we lost your voice. No, you're still... I can't hear you. Maybe it's your headphones? Try to check it.
Yeah, what's up? Can you guys hear me?
Yeah. All right, you're back.
There's probably this.
Yeah.
I think it's time to move on to the founder's journey, because that's, you know, kind of coming from the, you know, having the background in in TradFi, having the background in crypto, seeing how the market structure works. When was the moment? Talk us through the moment where you kind of realized that this is what you need to do. QFix.
Yeah, it was. I always had this itch. So I'll start off by saying I really enjoyed my last job. And when we were in YC in San Francisco, they had this session where people were like, okay, why did you leave your job to start a company? And everyone's like, oh, I kind of hated my job. I really enjoyed my job. I think it was super interesting, and there's not many jobs out there where as a graduate you can get responsibility for like live revenue and P&L so quickly. And I really enjoyed that aspect of it, and the fast feedback loop that trading has, right? Like, especially in high frequency trading, if you make an improvement, you can basically see it next day in the P&L that you make. So I like that. I think what was missing for me really was like, I felt like trading as an industry, I felt like I was kind of 5 years late to it. And I really feel that way now as well. It's really kind of turning more into maybe what investment banking was in like 2011, like still paying super well compared to other jobs. But a lot of the allure had kind of died with regulation coming in, a lot of people kind of moving into their own kind of boutique firms. And I felt like I could continue to do well and make a lot of money there, but there was more opportunity elsewhere, especially with kind of AI things coming up. And a lot of things just aligned, quite frankly, right? So I had a very good friend from university, actually the guy who I helped break into John's May Ball and I met breaking into balls with. He was like a software engineer at Citadel, so like exactly the right skill set we kind of need to build a good team together. And he was really keen to do a startup. A lot of deregulation happening in the US, AI kind of taking over, venture money kind of free flowing. So yeah, I just felt like we applied to YC, we got in. We were still working, and I was like, is there any scenario where in a year I don't regret taking this opportunity, right? And that's really what kind of pushed me over the edge. And back then I was still hesitant because I still really like my job, and there's obviously a lot of upside in it. But it was a natural decision, and now there's like absolutely no looking back. Like I can't imagine going back into that industry. There's so much to build, with the amount of tools and money and kind of free tokens and stuff that are kind of lying around there. Anyone who has an idea really has no excuse to build a new business that can be worth unicorns. I really sincerely believe that. So that was kind of the reason I stepped into it. You asked about the journey. I mean, journey is, we were working our jobs, and then we basically had this idea for like a recruitment startup, which like it turns out wasn't a very good idea. We applied to YC with that, and then they told us it's not a very good idea. Do you have any other ideas? And I had this idea for an exchange for like a long time, and no one was really building it. So I thought it's a little bit difficult to create an exchange, but like let's just go for it, right? Like if we get money from YC, then we probably have enough money to build an exchange, right? So I was like, okay. So we applied, and we got in, and that was kind of the end of that. Like it was totally decided that we would go to San Francisco and start building. And yeah, it's been a crazy journey. I think it's been 14, 15 months now building the company. Launched 3 months ago. Took us a year to launch. And we're still growing, expanding, and improving our reliability. But yeah, been a totally different path to what I imagined my life would look like right now when I was 18, let's say.
Yeah, pretty interesting. I'm just curious, how much, because you said you had one idea and then you got into YC and then you had to pivot to another idea, right? How much were you inspired by, I don't know, like the Hyperliquid or the other perps, like crypto native perps exchanges, although they're also expanding now, and we can talk also about that. Because like Hyperliquid has always been a different beast, right, on its own, and like they had a different culture. I think like the team members were also from the UK, correct me if I'm wrong. So like, were you guys inspired by them and you're like, oh, I just want to do what they are doing, but I want to do for stocks and commodities and for an exchange? Like,
yes, I mean, yes and no. I would say we knew exchanges are like a massive idea, which investors love and we love, because we thought if we're leaving these very highly paid jobs, we may as well go for something huge. So we always knew exchanges were like a big idea, and more than Hyperliquid. I mean, so when we started the company, like no one was doing equity perps. Like it was like no one's radar. It's only come on the radar in like the last 7-8 months, I would say. So we're still very early. But Yeah, around when we were doing it, no one's really doing it, and I would say that the exchange that I kind of admired most at the time, and still is Binance, right? Like having been an HFT trader and traded on a bunch of exchanges, your
Right.
job as an exchange is just to aggregate as much liquidity as possible at one point in space and time, right? So, which gives everyone the lowest transaction costs, and then you have ultimate marketplace modes, right? If you want to trade S&P futures, then the CME, which is the exchange for the S&P mini future, trades $500 billion a day of S&P mini. So why the hell would you trade S&P futures? There are S&P futures listed in a bunch of other exchanges around the world, but why would you have a trade on those? They don't have the liquidity the CME does. And if you look at on the crypto side, the exchange that managed to grow the fastest and have like the most commanding market moat really is right at the top end. Kind of Binance is by far the most liquid and the best. They have a ton of institutional volume. They kind of made decisions that made them more compliant, I would say, and allowed basically. I was at Tower, for example. No secret, the Tower trades on Binance. It's out there in the papers. I can say that openly. Tower had very, very strict compliance, and even then they were kind of happy to trade on Binance. Whereas Hyperliquid is not really something that they touched while I was there. And that really allowed them to be the most liquid, attract institutional volume and liquidity. I don't think they tried to play too heavily into the kind of the CT game, but they just let the product speak for themselves, right? I think Binance has like insane liquidity, insane product, very low fees. If you want to trade for the lowest volume, for the highest volume for the lowest fees, you go on Binance. On the other side, Hyperliquid came in with a very interesting strategy, which is basically, hey, how do we kind of legally engineer this thing so that we don't have to offer KYC? I think the other thing they did super, super well is they managed to list everything that was going up as fast as possible, right?
Yeah.
And that's something we're aiming to do at QFX as well, right? Like we are doing, this week we have 15 new listings lined up, and we basically built a machine that connects exchange, market makers, retail traders, pro-tail traders, all these guys all together to trade these assets as fast as possible. And the only way you really win as an exchange is if you list assets that go up, because retail generally tend to buy. And if the assets you list go down, right, like you list cryptos and they're going down, then your users lose money and they get pissed at you in exchange and leave, and they don't have money to continue trading. And we as an exchange, we don't make money when our users make or lose money. We just want them to trade more, so we basically make more on fees and we improve liquidity.
What happens when a user gets liquidated? Isn't that not part of like the perp revenue?
It's not part of the exchange revenue. The revenue is used basically to the money that they have in their account is used to do the liquidation. But anyone who's on the order book will get the other side of that liquidation, right? So it could be another retail, it could be a market maker, it could be a pro retail user. We have plenty of those as well. And any equity that's left over goes into an insurance fund, which is then used basically to top up the equity of those accounts that go negative after liquidation, because sometimes that also happens as well. So we have that kind of insurance fund model. That money does not go to the exchange. We don't have any incentive to liquidate people. I don't think any exchange operates that model. That would be like a direct kind of conflict of interest against our users.
Yeah, to get them wrecked. But I love it. I love this platform because I'm already in, and it's on Arbitrum 1, which means I need to bridge some ETH to Arbitrum 1 because I haven't used that since the Chunky Monkey mint of 2021. And once I got the ETH on Arbitrum 1, I'm going to go and demo and show you guys what assets are available. We can walk through the platform a little bit. And I'm also going to place a trade live because ASTS is a ticker that's been rocking. I just kind of scraped Wall Street bets very roughly just to see like what tickers are popping there. And the number one most talked about, I have no clue what the stock does. I want to throw in a couple bucks just for the demo, for the vibes. And because Ananai is on our show, into ASTS, it's very easy to use. How much leverage should I go with? I haven't used leverage in a while as well.
50x.
I think we do 10x on ASTS. You may as well go 10x.
I mean, it's 3:30 now here, which means it's 8:30 EST, which means market open is in an hour. Can we get some good news? I mean, Trump can just tweet and wreck me. We have decided to go full tilt and take over Cog Island, and then my position it will be liquidated automatically. But I want to kind of take an opportunity to stop in and answer some questions from the audience because we have two really good questions. And I appreciate people asking that because it means they really care. And this is something that I also want to ask as well. Like, you know, you said you guys on KYC. We spoke a lot about different compliance. You know, that Tower Research will trade on Binance. Obviously, Binance have KYC. Mexi just introduced KYC, believe it or not, in 2026 after not having it for a long time. I got the email, you know, where's your passport? Hyperliquid obviously is decentralized. QFX, the perps exchanges are sort of in a different non-KYC category. Now, you mentioned that, like, and this also touches to Josh's question, because it's like you mentioned that institutional allocators, Tower Research was handling institutional money. They weren't so comfortable with hyperliquid and non-KYC venues. How does that, you know, dovetail what you guys are doing, you know, in terms of, obviously I'm a non-KYC guy, like I don't want to put my passport up there. I'm just thinking in the context of what you said about the big players wanting to trade with Binance, even though, you know, because they have KYC versus Hyperliquid. How do you see yourself fitting into that kind of tension?
Yeah, I mean, so the interesting thing is that there's kind of two aspects of it here. So one, what is KYC, right? And who really cares about KYC? The people who really care about KYC are basically the big kind of anti-terrorist watchdogs in the world, the FBI, to some extent the SEC and the CFTC, but mostly the US government and other major governments in the world don't want to see you facilitating terrorist financing, money laundering, any of these kinds of things, right? Because it makes them harder for them to track crime. So it's financial crime prevention. Now, in the olden days, and by the olden days, I mean from the beginning of the universe up to about 2 months ago, if you got someone to send a selfie of themselves with their passport, it was generally very, very difficult to get around the fact that you now know who this person is. So if they end up doing any financial crime, you can basically tag them and they can be discovered and found out for it, right? So it's a pretty effective way of preventing financial crime. And then you may have to do a few other things as well, like you may have to ask them for source of wealth, source of funds, you know, all this stuff. We have to upload your bank statements and tell them how much money you make. And basically the point is they try to figure out if you're doing any crime in terms of money laundering and terrorist financing. Now, as of a few months ago, and by a few, I mean like 6-9 months ago, AI has got good enough where that stuff just doesn't work anymore, right? And we saw it on our own platform. We saw people using drop IDs. I think Cled had this like really funny article where they were like, we're banning all of Nigeria from using Cled because literally people are just putting fake IDs to KYC on our platform and trying to get paid for it, right? And we just can't have any Nigerian IDs. And then people started like putting like their photo on like Japanese IDs and the system wouldn't pick it up, and the CEO would just pick it up when you're scrolling through. So in terms of enforcing financial crime, we're in the early stages of this, but my strong belief is that as the world goes more towards kind of a stablecoin-based, blockchain-based setup, and as more and more of the world's currency supply goes onto the blockchain, right? And we're already seeing it in the US with legislative acceptance of genius compliant stablecoins like USDC, right? Like Circle. More and more money flows will become like instantly auditable, right? And basically, in terms of enforcing anti-financial crime measures, governments will move away from doing document KYC, which is kind of the standard right now, and move more towards on-chain tracking of where the money came from. Has it touched a tainted wallet? Does it have suspicious transaction history? Does the kind of geographical location of the funds match where the user's logging in from? And basically, we track all those things. So we have a tool that basically creates a user profile from every user, not from what they tell us, not from the KYC data they give us. You know, we don't want to ask you a passport, but from what you actually do, right? So we track your usage statistics on other platforms. We track, you know, where your money actually came from, kind of blockchain-wise. Did the on-ramp come from a reputable source? You know, are you logging in from any prohibited jurisdictions? And as long as like you're not doing anything illegal, like we don't really care. We don't need to know what your name is, certainly, because your name doesn't give me any information. And we believe for building in the future. And I think in the future, this will become the default way of enforcing anti-financial crime. Governments will be happy, we'll be happy, users will be happy, and we're just early on that, right? And we can afford to be early on it because we're young, we're dynamic. We don't process tens of billions in transactions where we have a lot of scrutiny on us. And we can offer this improved UX years before the other exchanges are going to be able to do it and catch up, because they're going to have to do a lot more convincing to the regulators to do this. Yeah. So what I will say is, when it comes to compliance, the private sector always moves before the public sector. When it comes to big institutions, they have compliance departments, but their compliance departments are also beholden to the owners of those financial institutions who want to make profit, right? They want to make money. And, if I'm a big trader and I go to the compliance guy and I say, hey, look, can I trade on this exchange? I think if I trade on this exchange, I'll make $100 million a year because I have these strategies that I want to run. And I can only run these strategies on QFX, let's say, or this exchange, whatever exchange. Then the compliance person will have to take a serious look and say, hey, can we actually be in breach of any financial crime rules, given that they are doing all this compliance work, but just that they're not doing KYC? So that pitch becomes a lot easier with the private sector. And I think, in my opinion, in a couple of years' time, governments always move a bit slower. This is going to become the default in the main world. And, from a company culture perspective, we think we have an obligation to prevent, a moral obligation to prevent terrorist financing. We don't want those kind of people on the exchange. We also think it's a very short-term decision, because if we do end up facilitating any financial crime, we'll just get shut down, and then our users, that's the easiest way to piss off your users, is just like shut the exchange down. So we basically want to run the exchange in a way that it's going to basically end up being the next CME or the next New York Stock Exchange, right? And so we're not going to take any shortcuts in terms of our obligations for financial crime, but also we're not going to do the old-fashioned way, which frankly doesn't work anymore. So that's kind of the interplay between KYC, decentralization. A lot of decentralization is just kind of moving the legal risk into other places. Hey, here we are. Yep. A lot of decentralization is kind of moving the legal risk into other entities and other places. I think there's like it's not a clear case of DEX versus SEX, KYC versus non-KYC. There's like a full ban. You look at Polymarket as a great example. They're kind of hybrid like we are. You don't have to KYC to trade, just like we do have to KYC with us to trade, but you do have to KYC if you want to on-ramp your fiat. Same with us. If you want to deposit with fiat, which we support, you have to KYC. So that's kind of a big discourse in the whole thing. I would say the whole KYC compliance stuff is changing very rapidly, and our aim is to like build for the future, right? Not just copy what all the other exchanges do, because otherwise we don't have any edge.
Yeah, this is a very interesting angle. I was thinking, there is this narrative in crypto, which a lot of the cyberpunks are kind of doubling down on, and it's about privacy. You have the ZEC, like the Zcash, its price is up again. It was up last year and then it went down. Now it's up again. So this privacy narrative is I think it's going very strong. There's a lot of teams building all sorts of privacy solutions on Ethereum, from Railgun, which is something that I've been using, to Veil, which is on Base, to others, right? So I'm thinking I can just currently, let's say, bridge USDC to Arbitrum and then deposit, right? And then I can start trading. But what if before bridging, I took my USDC via Railgun and then I just kind of like it went into a black box and then just came out? So you essentially don't have a lot of history about me. You just see I'm coming out of a black box. And there's also a lot of other solutions like the Hinkal wallet, and I know the guys who are building it, or Railgun or others, right? What if someone is just kind of, I don't want to call them a mixer, but let's say you see funds coming out of a black box and you don't know what's their true origin, and then they just bridge to Arbitrum and then they just deposit. How do you deal with situations like this? I'm just very curious, because I think going forward, I believe more and more people will be using various privacy solutions. And I think it's going to be harder to track the on-chain, because I keep saying that the reason that we have this on-chain thing, it's a byproduct, because having everything public was the only way you could verify Bitcoin and double spend, right? But it's a byproduct. It wasn't supposed to be this way, because I think a lot of people would rather have privacy. So that's why now you have the private Bitcoin, which is the Zcash. And I think going forward, we'll try to see this movement to push for more privacy. So in the future, where you have more privacy and more private transactions and more mixers, how do you think it will be a challenge for you to try to identify people or track the origin of funds on chain? How are you going to deal with it?
Yeah, it's a real tough question. So I think there's various aspects to it. I think basically I agree with you. I think like having everything totally on-chain, public, people's ability to basically dox your wallet, right, and then track your entire history is like not only like undesirable, it's actually downright dangerous, right? Like people could dox my wallet and then be like, oh, this guy is spending money at this coffee shop this morning every day, and then turn up to meet me there with a nice surprise. I think there definitely is some middle ground, right, between privacy and let's say source of origin, let's say origin of funds. And I think what we're going to see is privacy nodes, right? Let's say like Zcash, like mixers and stuff, but not fully kind of decentralized open source, like a lot of the cyberpunks may want, basically. So I already think that, you know, if you use a bunch of these like very effective tools like Monero, Tornado Cash, like all these things are banned in the US because the US government's approach is like, well, I mean, if you're using these, you're probably doing something illegal, so we can't track it, so we're just going to ban them. What I see is, you know, and I'm a big believer in working with regulators and working to basically bring innovation to the masses, and the only way you do that is by working with governments and not against them, and helping them understand the advantages of, you know, crypto and the advantages of blockchain technologies. What I really see is like as stablecoins get more and more regulated, you'll get government or quasi-government institutes like Circle is fulfilling that role right now, which add an effective privacy layer to blockchain-based spend, but still manage to maintain compliance policies in the sense that, you know, they don't let money from Tornado Cash or from Monero kind of come in and enter the network. So it's very similar to how banks do it currently, but just way more effective and way more automated, because the entire transaction history of something is instantly traceable. You don't need to say, ask the sending bank, hey, where did you get this money from? And then ask the sending bank to them, where did you get this money from? And then trace it back to 50 entities. The whole thing is kind of traceable much more easily and on a ledger. But there's still someone doing the gatekeeping. I think it's very hard to have a fully open, decentralized product. One is, as you said, you know, historically, a lot of blockchains just kind of worked on assumption of open transparency for verification reasons. I think as technologies improve, we won't need that anymore. And the other thing is, you know, if you have something completely anonymous, decentralized, and an effective way of moving money, overwhelmingly criminals will want to use it the most, right? Because the innovation will go towards the ones that don't facilitate crime, because no big reputable company wants to work in the area of crime. So they will produce the best product. And then, you know, who uses... I mean, last time I used Monero, right, it was a terrible experience. I had to kind of... there's only like one decent wallet app which supports it, and I had to do a swap on there. It was like ridiculously expensive to swap. And then, you know, I don't mind holding my hands up and say I've used Monero in the past, right? Just because I was curious and I wanted to try it out. But I wouldn't want to move any big sort of size on there unless I had no other option, which basically means I was facilitating crime. So, you know, we're really in that. I think it's a nice ideal to have everything kind of fully on-chain, decentralized, etc., open and so on. But I don't really think open source privacy solutions are going to be the way forward because of the potential for abuse, right? And I think just like everything, it will be solved with new technologies. The solution may not look like anything we have right now, and likely regulation is going to have a big part to play in it.
Right. Got it. Okay. And one thing that I also want to understand about QFX is, so we talked about that you don't have the KYC, so it's or light, right? You don't have KYC, right? And so it's very similar to Hyperliquid. But I want to also understand what's behind the hood. So maybe you can just talk about a decision not to build on chain. So it's a bit more like Binance because it's centralized, right? It runs on the centralized limit order book versus Hyperliquid, which has its own chain, etc. So maybe you can just give a high level overview of what's under the hood. How is it similar to Binance? How is it different from Hyperliquid? And what does it mean for the user experience? And why did you make the architectural choices that you guys made?
Yeah, so our main choices were basically a big reason Hyperliquid is lower liquidity than Binance, quite frankly, is just like it's a big pain in the ass for market makers to connect to. So we wanted to build an exchange, and by that we wanted to build the most liquid product with the most listings. And in order to do that, we had to make it as easy as possible for market makers to integrate. And having worked in high frequency trading, I mean, our whole team is like ex high frequency trading, ex quant background. We basically know that every trading firm under the sun trades on Binance, because every trading firm, whether they're kind of traditional, new, crypto native, non-crypto native, options focused, stocks focused, futures focused, have some department, some desk which trades crypto. And if you trade crypto, you have to trade on Binance. It's the most liquid exchange. So we were like, we need to provide the user experience which is most similar to the most liquid exchange that's out there. And the way we actually built the V1 of the matching engine is we literally took the Binance request and response JSONs. Like we took their API and we queried every endpoint and we took all the responses and we fed it into ChatGPT and we asked it to build the exchange which would produce those outputs. That's literally how we started. And when we went up to this to a lot of our market makers and say, look, we've made the exchange similar as possible to Binance, they were like, great, it means we can integrate in a day, or like, if it's a big firm, maybe 2 weeks maximum. Typical big firm integrating a new exchange with an architecture which is similar to what they've seen before might take months. And as a result, we were able to bootstrap liquidity extremely quickly, and we still have a lot of liquidity. We're one of the most liquid exchanges on equities right now, if not the liquid, most liquid a lot of the time. We have the most number of listings of any equity perps exchange right now by far, because we focus on new listings so much more than the others. That and all of that was due to our decisions architecturally, right? Like we based the exchange in AWS Tokyo. We had a very similar endpoint to Binance. It's kind of a pain to trade on Hyperliquid a little bit, I would say, as a market maker. You have to deal with on-chain aspects, you have to deal with off-chain aspects, you have to deal with Cloudflare. It makes it very hard to keep a stable connection because they're kind of fully permissionless, and what that means is they can't like easily figure out, okay, this person's actually an attacker, we're going to block this person's not, they're fine. And I think for us it was do or die. It was like if we went to a trading firm and the equation for them pitched from 1 week dev work to integrate to 2 months, they're just not going to integrate and we're not going to have any liquidity. So we decided to keep the whole matching engine off chain for high performance. That's something huge that we used to look for at Tower, is because if an exchange has really bad tails for latency, right? Like if the exchange basically needs loads and loads of time to process your order, and that varies quite a lot depending on how busy it is, that makes simulations very hard. It makes backtesting very hard for those trading firms, and then they're less likely to want to trade on your platform because they can't predictably know what their P&L is going to be, right? So we decided to build a whole system in a way that would basically make it friendly to algorithmic traders and market makers. And I think not just HFT firms, but a lot of our retail users now are also doing algorithmic trading using our very friendly CLI. They're running agents on it. They're running bots on it. We have very good API docs. And we wanted to attract those kinds of users. And basically, if you build a shitty API, it's a great way to lose them. So that was our reasoning for that. But that being said, we're on stablecoins. The settlements, deposits are on chain, Arbitrum One. For institutions, we do have the ability for them to park their funds with BitGo, who's our US regulated cold custody provider. It's a very long process to integrate with them. They have to audit all of our compliance controls, financial controls. So we have that safety for them as well, right? Like Tower, we would not put $50 million of trading collateral on chain on Hyperliquid because the chance of it getting hacked is just so high, right? No. Whereas if it's a US regulated provider, that chance really diminishes. And that's kind of the type of user base that we want to target, and we'll continue to target.
That's really cool, but I'm not that user base, but I do want to show off this platform because it's pretty sleek right now. It's giving off Hyperliquid vibes with the green. Yep. Obviously, deposit withdrawals are super quick. It was on Arbitrum One, on chain. Everything was on chain, and I'm looking now at ASTS, and you have classic, all the markers here, open interest and the volume. The volumes are quite nice. It means that you can retail can come in and trade with minimum slippage. Obviously, it's still not at whale volume yet. So before I place a trade, my first question is how did you get to this point where you have so many listings in such a short time, and most of those listings have tens of thousands of dollars in daily volume. They have some liquidity. People can make trades in retail size. And then what's your plans to get to those big whales that you mentioned?
Yeah, totally. So I mean, if you click on the top right there, that kind of 3 stacks icon, top right, yeah, other side, yeah, there you go, and then go on product search. Yeah, tap that. Okay, so on the left you can kind of see volume and basically prices for kind of everything we list. So that's like a really easy way to see a ton of our products. Yeah, so that's basically all the products that we have listed. We typically list them based on yeah, we typically list them basically based on user demand. So we have a lot of early users. A lot of them are big whales. A lot of them are very time zone specific. So they only trade Korea hours or whatever. And we basically use them to figure out what stocks we should list next. And we also work with some partners on Twitter who kind of want to trade certain instruments, certain assets. They will say, hey, can you list this? If you list this, then I can probably trade on it. I don't want to trade on attractive brokers because leverage is not there. It's not 24/7. I want to exit on the weekend and so on. And we were able to list that for them as well. So everything you see here is part of kind of the AI boom. We have kind of some AI infrastructure stocks in there, things like that. Yeah, I think that's basically a good summary of where we're at right now. We've been live like 2-3 months, and we have a decent amount of early users, and they just ask us, and we deliver for them.
Where most of your users come from? I'm just curious. Like, do you have any idea about the geographic breakdown? And also, why did you? I think you said like your exchange lives on AWS Tokyo, right? Why did you pick Tokyo? Is it because
all the other exchanges are in Tokyo? So
Yeah,
if we don't,
okay.
then it's much harder
So
for
you
market
want-
makers to integrate.
Okay. And
That's
what
literally
about-
it.
And in terms of users, where do they come from? Do you have any?
They're kind of global wherever we can accept users. I would say we have a strong presence in Asia as well. So we have some Korean stocks, some Chinese stocks. But we have kind of they're pretty global, I would say, and that reflects the global nature of crypto as an industry.
Got it.
So I just made a trade. As you can see, it's very quick to do. You see my post summary. I can don't show again. I'm already down, losing money as we speak. But it's super simple. You have your margins over here. You have your leverage over here. You can take your order type. It's a very sleek exchange. You can see that it was built by professionals. There's some sort of a leaderboard here. Once I start to make money, then I can get on a leaderboard.
Yeah,
And
you
there's
have
a
to realize your
referral
P&L.
program. So
Exactly. So you can
referral-
see all your referrals as well. You don't have any obviously at the moment, but if you refer anyone, they get discounts on fees, and you also make some revenue if they do some trading. So
I'm gonna refer Aram. I don't know if he'll trade, but I did refer him, and then I can add some more later. But this is very cool. Like, how do you guys? What's your process around listing an asset? Like, how from the moment you decide, okay, we want to list this ticker, how does that get onto the exchange?
yeah, so it's mostly up to the market makers. We have 7 market makers now. Some specialize in the FX, some in the commodities, some in the equities, some in the equity indices. Some do a combination of them, but they're kind of very good at one or the other. Our biggest market maker is kind of able to list stuff, new US equities in kind of under 30 minutes. And we're able to handle that on the exchange side as well ourselves. So we have a pretty pipeline. And then typically once that big one kind of comes in, there's some retail volume, the other ones will follow suit. So I would say, the sleek system we've built up to onboard new liquidity providers, add Oracle pricing streams very quickly, and kind of ensure to them that they're going to be able to connect easily, quickly, without having to do too much extra work, and also that their money's safe in a US regulated custody provider is key to being able to list new things quickly. We don't have to go and start begging for liquidity. If we want to list something new, we can just kind of be there and deliver for our users.
Yeah, epic. It comes down to the market makers at the end of the day. So I think we're getting to the end of the show. It's been an incredible one. I made a trade. Hopefully it's going to retire me. But if not, we will see you back here next week and the week after for more epic shows. And now we want to go into our lightning round with Anna and I. Lightning round. Quick questions, right? That can just answer it straight off the back of your head, right? What is the piece of advice you'd give the version of you still sitting at the tower trading desk?
Yeah, I would say take more risks. I think I had when I was at university, right, I was in this like effective altruism movement that I think was very popular even in the last crypto cycle. Sam Bankman-Fried was the biggest espousal. And the cool thing they taught us was very logical, is like, if you grew up in the West, and where's the lightning round? It's a bit, I'll try and sum it up in 20 seconds. They were like, basically, if you live in the West and, my parents, I was born in India in not great circumstances. My parents worked very hard moving to the West. If you live in the West, nothing can really go that wrong for you, right? Like, even if you take a lot of risks, especially if you're highly educated, you're always going to end up being fine. And I think I always knew that at university, but when you kind of enter the workplace, you start seeing the salary, you start seeing how much opportunity cost you have and how much you can lose. You start to think, oh, maybe this is okay. And I think I had a few years at Tower where I was just kind of happy to let everything slide. Things were going well. I wasn't pushing too hard. I wasn't trying to innovate and make new things. And I probably stayed there about 2 years too late. I think I could have left 2 years earlier, and we'd be in an even better spot than we are now. So to the younger version of myself, or if you see yourself in me and you're watching this, don't be afraid. Nothing can really go that wrong. And now, in particular, is the best time ever to go out and make the change you want to see in the world.
Yeah, you said you have a small core team, right? So I'm curious, what percent of the code has been written by AI, and how much AI do you use in actually building this product?
We use AI in everything. Everyone we hire is super technical. Even our marketing guy is an engineer from one of the top universities in his country. We use AI. We're moving most of our AI to GTM, most of our GTM to AI. We do a lot of it with AI already. All the code is written by AI with AI code review. All the kind of DevOps work is done automated via AI agents with some human review here and there. We basically hire people to build harnesses for AI. And that's true on the kind of Exchange side, it's true on the DevOps side, it's true on the UI side, and increasingly it's becoming more and more true on the GTM side as well. So that's our standard for hiring. We hire like super technical people with very high hiring standards. I would say I spend probably 4 or 5 hours a week in interviews, and even then we manage to hire like one person every 2 months because most people just don't meet our bar. Even though we're happy to compensate recruiters and so on. Yeah, that's basically a good summary of it. I think most people don't use AI enough, and big companies in particular don't use AI enough either. And I made a lot of angel investments in companies that are kind of building for the future, where the big industry titans of the world, big insurance brokers and so on, start to use AI agents like in full force. Can you imagine like how much token spend they're going to have? Right, it's going to be ridiculous. So that's the future I'm really excited for.
Right. Another one on AI, right? So you've worked in HFT companies. So and now you're building an equities perps exchange. So I'm curious, did you ever also say, hey, you know what? Apart from this, I also want to build an autonomous AI bot and I'm just going to give it some money, and I'm just going to let it go wild and just trade and see if it can 100x or
yeah, you can do this on QFX. So we have a CLI which has been completely optimized for agent uses. Funnily enough, we actually use it to do a lot of the operations on QFX. For example, if we're doing a maintenance and we want to clear all the open orders, we can just get the AI agent to just like run a command that will clear all the open orders. So we have our own command line interface that we can use to take actions on the exchange. And it syncs up perfectly with AI agents and AI bots. And a lot of our users, we actually have a lot of users who use AI agents and AI bots to trade. And I haven't got around to it myself personally. Like at the moment, I'm just like aped long a bunch of like US AI infrastructure stocks and some SPX December calls as well, actually, as of a couple of days ago. But I'm sure I'll get around to it. I'm just too busy delivering for the users.
Awesome. Let's get another question that we had is that crypto taught traditional finance more than traditional finance taught crypto. Agree or disagree?
I completely agree with that. I think crypto probably could have learned a little bit from traditional finance. I think crypto has repeated a lot of the same mistakes traditional finance made, but on a much more compressed timescale. I think Matt Levine from Bloomberg does a really good job at it when he says kind of crypto is what happens if you take like a bunch of super smart 20-year-old interns and tell them to reinvent finance from scratch. Like at the end of it, eventually they grow up and you do build a better system, but you end up making the same mistakes on the way. I think we've really passed that mistake-making stage. I think in 2021, 2022, there were a lot of problems with exchange design. It's some exchanges out there had some very easy exploits. We saw famous cases like Mango Markets, people draining reserve funds, people draining wallets. I think those lessons have been learned, and now we're in that golden era where we can take all those crypto innovations, lift them out, grow up, and then move them into the traditional world. And we basically speed run finance. And the key thing is, a lot of it has been done out of regulatory scrutiny. I think regulators really like to tell entrepreneurs how to build their products, but entrepreneurs are the right people to know how to build those products. And when you remove that regulatory certainty and you give it to a bunch of smart people, that's when you see real innovation.
Right. And I want to, I guess, ask the final question, which is my favorite one, and I like to ask this to all the guests. I see that you are very active on LinkedIn. I see also that you're very active on X. And traditionally, a lot of the founders who are building various perps, DEXs, right, exchanges, they're not very active on LinkedIn, but you are active. So I'm kind of curious, how do you think about LinkedIn versus X, especially for founders who are building in this space, and why are you active on LinkedIn?
Yeah, I wouldn't say I'm super active. I probably post about once a week on LinkedIn, whereas I post probably a couple of times a day on X. I think X is obviously, they've done a very good job curating it so that all the basically smartest people in the world are on X, and they post there all the time. I think quality of content is really high on X, even outside the trading community. And as a result, because traders are always kind of drawn towards smart people and the newest ideas and the freshest ideas, a lot of traders are on X as well. And therefore, my posting on X, yes, part of it is, my ideas, my thoughts on the world, how I see things progressing, things that I think other smart people out there, the other traders out there will find interesting. And some of it is kind of marketing related for QFX, upgrades, updates, product updates, and so on, that we can kind of put out there. So the reason for LinkedIn basically is I just distill some of the non-trading. So usually stuff I post on LinkedIn is not trading related. I distill some of the kind of most pertinent, up-to-date, kind of intelligent conversations I have with my wide group of friends, and kind of put them on LinkedIn, or maybe advertise that, maybe I'm speaking about one of these things at some event if somebody would like to join, just like I did with this podcast. And I think for me, LinkedIn is more, it's not really there to kind of speak to potential users and potential customers and potential traders. It's more about creating a trail for me that when I can look back at it and I look at what I was posting, it almost produces like a time lapse of, diarizes what goes on in my mind about kind of the state of business, companies, technology, kind of opportunity that exists out there in the world. And a lot of that is changing very quickly. Just 6 months ago, we thought we were going to have to hire loads of people to do GTM, and we didn't think that AI was capable of kind of helping us curate content. I was writing every single post I did completely by hand, manually, and now I use AI to help. Obviously all the ideas are mine, all the ideas are fresh, but I use AI to do research. I use AI to sharpen the tone. So yeah, I think LinkedIn is more for me than for other people. I have like a reasonable number of followers now on LinkedIn as well. But it basically gives me a nice way to look back and track how my thoughts have kind of changed over time. And, when we work, we work 5 days a week in the office, 12 hours a day. And on the weekend, I work as well. But on the weekend, I work on longer term projects, longer term improvements. And I work by myself, basically take time for myself and work on things like that. And that's more the kind of stuff that's likely to end up on LinkedIn, I would say. It's just kind of a medium for me to kind of get something out there and hold myself accountable for producing non-trading related good for the world.
Yeah, love it. And I think we should have more creators, more founders like you who are being active on LinkedIn and sharing their thoughts. Yeah.
Totally. Yeah, LinkedIn is your target audience for trading is definitely on X, and but I see what you're saying about LinkedIn and time goes fast, man. Before you know it, you're gonna be going toe to toe with the CME for volume. Looking back at
absolutely
in
3 months,
when you told some two strangers about the times when KYC will be made redundant and a sequence of AI super intelligent beings will know who we are before we even click a mouse. So I'm glad to have you on to share these kind of thoughts here. The future looks super bright for you guys, and I'm obviously a brand new user on the platform. If I feel frisky, I'll start trading them. Or honestly, there's very little thing happening on chain right now in terms of crypto. So if there's ever a time to take over the world, it's now.
The trenches are dead, man. I think AI is where it's at, and if you want to continue that kind of crypto UX and no KYC, high leverages, smooth trading, 24/7 availability, there's only one place to be, and one way to do it.
Awesome. Thank you, Ananai. Thank you, Aram. Thank you to all our people. If anyone wants to hire this guy, give him a shout. Good
I'll
day,
take a
good
look.
morning, sir.
Okay.
That would be
Cheers.
crazy if you actually got the job. Let us know. Keep us posted. Have a wonderful day, everyone, and we'll
All
see you
right.
back next week.
See you. Bye.
Bye bye.